Hello, welcome to IGTV. I'm Angeline Ong, and this is your look ahead to the week starting the 3rd of July, 2023. Lots of economic growth data out, and we start on Monday with the Tankan numbers out of Japan, the Caixin out of China, and also manufacturing PMIs out of the US. On Tuesday, we've got a rate decision from Australia. Now, don't forget, the RBA has surprised twice already and caught pretty much a lot of the market off guard and raised interest rates there as its inflation remains stubbornly high. We also have trade balance numbers out of Germany too. And then on Wednesday, we have the services end of the Caixin and the all-important key event of the week, FOMC. And on Thursday, Australia's trade balance swings into view again, and we've got the JOLTS number out of the US. And on Friday, we end the week with German industrial production and also the non-farm payrolls. Well, joining me now is IG Senior Market Analyst Axel Rudolph to talk about the S&P and how to position ahead of those non-farm payrolls.
Yes, Angeline. I mean, basically, it'll very much depend on the number of what's going to happen next. But if you look at the daily chart of the S&P 500, we can see that we're getting very close to the June high around 4,447. And if we were to rise above that, the next technical upside target actually would take us back to April of 2022 at around 4,513. So there could still be some upside in store for the S&P 500. Provided we stay, from a technical perspective, above the recent lows we made at the end of June at 4,328 on this daily financial bet here. So, yes, I mean, it's quite interesting because if you look at the chart of the S&P 500 in the previous week, it had declined every single day in a row, as you can see here, all these red candles. And then since Tuesday, we've seen the opposite, every single day being up. And obviously, we'll have to see whether that can continue in the course of next week, and then also as important data such as the non-farm payrolls gives us further guidance as to what the US Fed is going to do with regards to further rate hikes.
Now, Axel, don't go away. We'll be with you in just a moment because there's plenty of corporate news out in the coming week as well. Plenty from the consumer space, might I add. On Monday, we kick off with Q1 trading numbers out of Sainsbury's. We've seen many grocers here changing to cheaper brands as inflation really starts to bite and affect consumer habits. Pay special attention to what Sainsbury's says about inflation and cost margins. On Wednesday, we continue that theme with AO World out with numbers along with Topps Tiles. And on Thursday, Currys is also out with numbers. This is the electronics retailer where you can buy everything from mobile phones to televisions. And also Levi's, the jeans apparel maker, is also out with numbers. Axel, what can we find out from Sainsbury's? What are you expecting and how will this affect Sainsbury's stock?
Well, I mean, the Sainsbury's stock has done really well this year, so I guess it will probably continue, as you just mentioned, as people are buying more and more food, which is towards the perhaps not as expensive end of what they used to. And with Sainsbury changing the goods that it is offering its customers and trying to make them more affordable, it is quite possible that the grocer will continue to do quite well. With regards to the technical side of the Sainsbury's share price, we can see that the trading statement might actually perhaps take us back above the early June high at 278 pence. And just above there, we also had the May high at 281 pence. So from a technical perspective, what I would like to see is for these resistance areas to be taken out, because in case it is quite possible that the share price could rise by another 4, 5, 6% or even higher, take us back towards the 300 pence mark. And if we go on to the weekly chart, we can see here that that was back when the Sainsbury's share price hit its all-time high back in August of 2021. And that is a possible upside target if what we're seeing at the moment on this weekly chart is just a correction in a very strong uptrend. As you can see here, we've risen very nicely since September of last year. So probably further upside in store. If the Q1 trading statement were to disappoint, though, and if we were to fall on a technical perspective through the June low at 255 pence, I expect in that case the March low at around 238 pence, and perhaps even the 200-day simple moving average here in red at 234 pence to be retested. So it'll be interesting to see which way we are going to break out of this sideways trading range we've been in for the last month or so.